Welcome to today's session on a super important topic, and that is all about data, how to work with data, how to be efficient with data, how to prevent mistakes with data. If you're new here to this webinar, or if you've even been here before, you know that we like to start our webinars with first a little bit on who we are, who exactly is joining. So please let me know, who are you? What's your title? And where are you calling in from? Where in the world? So I'll go ahead and do that myself. New York, USA. Cool. Welcome, Tom. Tom is from St. Louis. And we got Patrice. So great to see you again here, Patrice. Hi. Patrice from Texas, South Carolina, and Canada. That is great. Now, for those of you who have been part of our webinars in the past, you'll probably notice something different about today's webinar, and that is we actually made the investment in a robust webinar platform called AirMeet, which is what you guys are all on right now. So they have a lot of really cool capabilities, and I'm excited to add even more value to today's session. So I'll just give another minute or so for people to continue sharing who you are in the comments. I'm glad that you like it, Patrice. Thanks. We got Josh from Phoenix, Arizona. Oh, we got Andy as a director of FP&A. Andy Cruz, great to see you. I recognize the name from email. And Radek, of course. Radek, I think you are the most consistent YouTube subscriber and webinar subscriber. So it's great to see you here on another one as well. All right, why don't we go ahead and jump in? And let's go ahead and talk about today's session as people are going to continue showing up. The whole purpose of today's session is to fix this issue over here. I spend more time explaining my variances than actually preventing them. I'm sure a lot of people here can relate to the idea that probably the most valuable thing that you can do as a strategic finance professional is to drive strategic insights, to help companies understand what exactly is going on in their business, what is going to happen based off of certain inputs, certain scenarios, certain assumptions. And then finally, when the actual time happens, what went wrong? What went right? Why exactly is there a variance? And what exactly do we need to do? Well, the best variances are the ones that are caught before they even become variances, because you have such a strong grip on the data in your company, on what is happening across all the different layers, whether that is specifically in the finance and accounting department, or whether it's the sales and marketing department or customer support, whether it's what the board of directors want, whether it's what leadership want, all of that information, it's a very heavy burden to ultimately carry. The more in control you are with your data, the more efficient you are with working with that data, the stronger the opportunity to get that grip that we're talking about. Now, when we talk about data, there are a lot of different things that feed into what we consider data. And of course, if you are doing a month-end close, the steps involved include a bank reconciliation in order to show the stakeholders that all the information that you're presenting actually matches. It involves probably the trickiest part of a month-end close, doing those adjusting journal entries, especially relevant whenever you're working on accrual accounting. When you have that information, then getting that information into your financial model as you actually finalize it oftentimes involves you doing a trial balance export, taking that trial balance export, reshaping that data, confirming and transforming it into your new financial model. There, of course, are most likely at least 3 new accounts that happens whenever you do that upload, which means you now need to detect where those new accounts are. You need to add them into the relevant tabs. You need to refresh all that information. And before you look, at least 2 hours for me, at least back in the day when I was doing all this by hand, it took me at least 2 hours to do all of this. And a lot of this work, it doesn't really contribute to your growth. It doesn't really allow you to have more free time and, even more importantly, the energy to then focus on all of those other things that we were speaking about, all of that strategic work, which is what you were hired to begin with. Because you are hired for a very specific reason. And that reason is tied to many of the important people in the company being extremely demanding. Those people are the board of directors. For those of you who are working with companies that have external funding, especially relevant with early stage startups. The board of directors, whenever they invest in the company, they want to make sure that all of the information, everything happening in the finance and accounting function is safe, is secure, that they have people protecting their actual investment. So they're going to be asking you questions that involve you having that really tight grip on data, allowing you to pull the information that you need quickly to get it back to them with a strong level of accuracy. But the board of directors is, again, just one of the stakeholders in the company. The CEO, they need to understand what's happening in the company. What decisions do they need to make in order to bring about the future they want and prevent the future that they don't want? The experience where they've witnessed a CEO not pay attention to the actual cash flows of the business, to when they're projected to run out of cash. And by the time they realize, they're either forced to raise capital at a very unfavorable valuation, or even worse, the company may ultimately become insolvent, which is the thing that ultimately kills a company. Now, there are a number of other people, like I spoke about, that we're going to be talking about in today's session that are going to flow into this whole data matrix that we're talking about. Think of department heads. It's very common as a company grows, instead of just the CEO, the COO talking to each and every single person, managing each project, you hire department heads. Those department heads manage a whole group of people, which means you now, as a finance and accounting professional, need to work with these department heads to allow them to understand what's happening in the business, what budget they have, how close are they to consuming that budget, where are they on and where are they off. It can become a nightmare if you don't have that proper infrastructure set up. And probably the biggest challenge, the biggest expense, the most difficult expense to control, 9 times out of 10, it is going to be at least 20% of your business. It's going to go directly to your actual headcount. Now, we can have an entirely separate section just talking about the challenges of working with headcount, whether that's processing payroll, whether that's making sure that people are signed up for the right benefits, there are no mistakes, there's no data breaches, but most importantly, reconciling all that headcount information so you can understand what are the salaries, what is the information by department, what are the different cost types, how to get that into your financial model. All of these create a lot of complexity when working with data. So this session over here is super important. It is super relevant. And I'm so excited to talk about this because, again, as finance and accounting professionals, we need to be data wizards. We need to understand everything about working with that data to pull it accurately, efficiently, with a breeze. So we're going to be talking about how exactly the data process works, starting with the month-end close, going then into your actual forecast. We'll go over what a real financial model, not just by GL account, but by class looks like, which now creates this whole new dimension that adds a lot of complexity that I think for those of you who have never seen a class-based financial model will really enjoy. I think it's one of the most unique things that I've worked on in my career and especially valuable. We'll talk about how exactly you can build the schedules to detect those variances, again, ideally before they even surface, and where the thresholds are for where doing it manually may start to actually break. Now, the file right now, for all of you who showed up live, we're going to be pointing you to where exactly you can find that information. But like I said, we're going to be sharing that workbook for all of you as a nice bonus for all of you attending. Now, for those of you who are not familiar with myself or my background, and for those of you who even are, it is great to be reconnected. A little bit about me and my journey. I got my CPA back in 2012, graduated. The entire world was ahead of me as I had my master's in accounting, thinking that I had made it and was joining the amazing world of Big Four accounting. But what I didn't realize was Big Four is just one type of company to work for, and taxes, which is what I was doing, is just one area of this gigantic, amazing universe of finance and accounting. And while it wasn't the right experience for me working in taxes and in Big Four, I am so grateful that I found all these other areas, the controllership areas, the strategic finance and FP&A areas, of finance and accounting, which speak to me so much more and has allowed me to really sharpen my skills as a data expert, allowing me to become a Microsoft MVP and eventually opening up my own fractional CFO firm. I was just telling someone today that we are about to hit our 7-year anniversary, which is pretty mind blowing if you think about it. So, with our fractional CFO firm, I have helped over 100 companies raise hundreds of millions of dollars in capital through working with data. Again, helping them understand the future, helping them show investors how to understand the future. I've also had the opportunity, which I'm so grateful for, which again, many of you may know me, for building this incredible audience as I started sharing thought leadership content. A fun fact, I never expected to have this own Your CFO Guy brand as a separate business, sharing these webinars every single week. It was really just a way to drive awareness to my fractional CFO firm. It's funny the way certain things can ultimately happen. We've also created an amazing tool called Model Wiz. It has had over 10,000 template downloads, and this template that we'll be sharing with you today is an excerpt from it that allows you to work with data a lot more efficiently. But I am especially excited for today's session because while in some ways I consider myself an expert when it comes to data, there's so much more that I just don't have that experience with, especially when it comes to the trickiest area of working with data, and that is headcount. So thankfully, today's sponsor, who keeps this webinar free for everyone to join, is Stephanie Johnson, who I'm going to be moving onto the stage right now, who is working at a very exciting company where data is what they work with every day as it relates to headcount. Stephanie, I won't do it justice. I'll let you take it away and tell us a little bit about yourself.
Hi, folks. Thanks, Josh. Yeah, excited to be here and talking to this group of folks. I really work with how you get data about the utilization of your most expensive resources, which is your staff, and solving the problems around headcount, utilization, and making sure that you can do the most with what you have or that you can grow your headcount efficiently. I started out in a product background with ClickTime, and I'm so passionate about the ability to solve the real-time, urgent, and important problems that our finance teams are having, our clients, that I'm eventually moved into a sales engineering role, and that's where I sit today.
Awesome. Stephanie, we're excited to hear your insights as we go through all this content, what you're seeing with the customers that you work with, what are some of your biggest data nightmares that you've ever worked with, and what advice you have for everyone here to get a tighter grip. Because you guys have probably heard me say this a bunch of times in the past on our other webinars. The problem here oftentimes is not how do I work with the data? There's always a million and one ways that you could actually pull something up, whether it's a VLOOKUP all the way through an index X match or a pivot table tied to the data model. The challenge is working efficiently with data. It's understanding different data structures so that you can manipulate and transform your information as it comes from one data source. And as you transform that information, it easily gets tied into another data source where ideally with just a few clicks of a button each and every single month, whatever workflows that you have is all manageable. So that again, everything that we're talking about in today's webinar, it's so that it's not only the time that you have to focus on those insights, but most importantly, it is so that you have the energy to actually focus on those strategic insights. Because working with data in a repetitive way each and every single month, that's a pretty energy draining activity. So there are a few mindset shifts that I want to focus on here. And the idea is data can come in all sorts of different shapes and sizes. And in some instances, you may be small enough where the data set that you're working on can easily just be scaled from month to month by maybe changing a formula over here, adding a new column. That doesn't really become an issue. The challenge is whenever that data starts to grow, both in terms of size and complexity. So now the work that you're doing each month just to be able to manage, make sense, and ensure the accuracy of that data really becomes too much. And what got you here most likely is not going to be what gets you there. So we have a lot of really exciting things that we're going to be talking about in order to help us get there. But I want to actually ask you, Stephanie, what are some of the biggest challenges that you've seen working with clients who have a lot of data?
Yeah, some of the things that I hear on a daily basis from the clients that I work with are the problems of handling multiple dimensions, especially translating the way that operations, the people doing the work,
Mm.
thinks about their effort and translating that into the terms and categories that finance really cares about at the end of the day. And that translation layer is something that a lot of businesses struggle with. It causes things like one accounting team that I worked with last year told me that they were spending fully 4 days at the end of every month just chasing ICs and department heads for data and making sure that then they have enough time to turn it around into reports. And that was causing huge bottlenecks in their reporting and decision making processes.
I'm really glad you brought that up, Stephanie, because especially as it relates to finance and accounting, I think the trickiest part is what we were talking about earlier, right? When you work with classes. For those of you who aren't familiar with what a class is, it's in essence a tag that goes into your general ledger. So instead of you taking every transaction or invoice or bill and saying this goes to this account, this goes to that account, which in and of itself can be challenging if you don't have the right chart of accounts. When you now have this tag, it can be a class, it can be a location, it could be a project, it could be a department. The whole idea is that each of these now adds a new dimension to your data. So, what do I mean by dimension? Well, think about a traditional profit and loss. You have your accounts going vertically, you have your dates going horizontally, and then you have your numbers that intersect with the date in the actual account. But when you now introduce a class, if you have four classes, you in essence now have four profit and losses all on top of each other. So you just 4x the amount of data that you're working with. And you need to be able to slice and dice that information, take it apart, show one department, maybe one department with another department, show maybe all four departments on a consolidated view. That becomes really challenging if you don't have the right infrastructure in place. And on top of that, your Excel file may not even be able to support that much data. So, in terms of where this oftentimes breaks from my experience, it's usually around that 40 employee mark. Usually, the 40 employee mark is when like everything I feel like changes in a company. And one of the biggest things, like we spoke about earlier, is this idea that now instead of just it being a simple org structure where you have maybe the CEO, maybe someone else in leadership, and then maybe 8 people underneath them that they're able to manage, well, each person can most likely only manage about 6 at most to 8 people at a time. So you start to introduce a head of sales, a head of customer support, a head of engineering. Now you're tagging the information in your accounting software, which while most of the accounting softwares can support it, some of them don't. And now you need to actually move to an ERP. So the information certainly becomes a lot more complex, which means the formulas that you were initially using now of VLOOKUP, well, now you're not just pulling in information for one specific lookup based off of account and the actual date. You can't use a lookup function, right? You need to use a different function that can filter in which classes you have selected, for which periods you want to show the information to. The formulas now can break as well. On top of that, you also now have this challenging issue when it comes to compliance. You want to share the information. If you just think about, let's say, the R&D tax credit, right? You want to make sure that you're properly segmenting all of this information so you can take advantage of the relevant credits. So that's been my experience as a fractional CFO with the companies that I've worked with. Stephanie, I'd love to now turn it to you. What are some common breaking points that you see where the company's data just breaks down?
Yeah. I think back to an example of an IT team that I worked with, and they moved to a slightly different staffing model. They had multiple locations. They had a combination of full-time employees and contractors, and they had projects that were split across location and by department. And every time someone changed a role or a location mid-month, that all of their VLOOKUPs broke. And so they had these incredibly beautiful spreadsheets that then weren't working and weren't delivering the value that finance needed. Another one that I see really commonly, you brought up the classes. pushing all of the information about what class you need to eventually map to on the finance side all the way to the end user is a trap that sometimes people fall into. They say, if we just have enough detail in our time record, eventually it'll get to the right place. But really, that's not a best practice. You guys know that some of that stuff shouldn't even ever show up in the employee's viewpoint. So it really gets hard, as you said, over 40 people. Oh, when you have long lists of projects and initiatives that you're working on, and when you start adding in those classifications and those auditable trails.
I'm glad you brought up projects. I'm curious if there's anyone here with us who has extensive experience in the construction industry. Because if you do, when you hear this buzzword project, you probably shiver a bit because you know how challenging it can be working with projects and how important that is for the actual construction industry. It may also be especially relevant with nonprofits. I know that classes are also pretty common and you can use those interchangeably. So if you also work with nonprofits, definitely let us know in the chat. That also reminds us, so Lorinda says, yes, reporting in construction industry, that is a pain point. If you guys do have questions, we have a Q&A section. We're going to get to them at the end. So please do go ahead and put that together. And we have Diraj who works with nonprofits as well. So I'm glad that you guys can relate to that. We're going to be showing you guys shortly how exactly this all works with a proper Excel file structure. But I first want to talk about how you even get this information into a point where it can be analyzed, right? Because there's the thing, garbage in, garbage out. It's like a pyramid, right? The very bottom of the pyramid needs to be data integrity. If you're not actually getting the information correct to begin with, no amount of work that you can do afterwards is going to be able to solve that. So when we think about the entire data cycle, right? First, an accounting event actually takes place. That accounting event is a transaction posted to your bank account, a transaction posted to your credit card, an invoice issued, a bill received, a contract signed. All of these events can trigger financial activity that is now going to result in data. But data doesn't just automatically turn into information. It doesn't automatically turn into insights. You need to classify the information by the relevant general ledger account. If you're using classes, projects, locations, departments, you need to tag that as well. You most likely want to tag the customer name, as it's common to analyze your data by summing up by customer, especially if you're working by project. Maybe you also want to tag the vendor. Maybe you also want to tag a receipt. All of these are data points that ultimately go into that month-end close. As you then complete your month-end close and you have all the information, you need to now get that not only into a spreadsheet, ideally, where it can be consumed, but the best spreadsheets, in my opinions, don't just show what's happening in the business and what happened in the past, but what the future can look like. And ideally, how you're bridging the gap between both of that. So now you need to actually bring in additional data to create that future, right? So the additional data now outside of your ERP or accounting ledger is going to be, like we spoke about, your headcount data. Who's currently part of the team? How much are they hired for? When was their start date? Do they have a bonus? Do they have a commission? What department are they a part of? Are they a full-time employee? Are they a consultant? So many different data points that now need to be captured. But that's just the expense side, right? How about the revenue side? You want to now include information from your CRM, again, outside of your accounting software. That CRM shows who are your existing people who are on the team, who are your existing customers that you're working with, who are the customers who are warm in your pipeline. That information should ideally be refreshable so that it feeds into your forecast, right? A lot of SaaS forecasts that I work with that are B2B, the first 6 months is just a combination of projections from their existing customers and their CRM customers, the customers warm in their actual pipeline. And you may also want to analyze information coming from a sales platform like Shopify, especially if you're in an e-commerce or CPG business, especially if you're in a B2B. Power BI just to be able to make sense of that. And then take everything that we just spoke about, right? You have this financial model that there's all these different general ledger accounts, all these different dimensions by class or location, all these different data sources feeding in. That's just one budget. What if you want to have an aggressive use case? What if you want to have a base or a floor use case? What if you want to now do a reforecast against all of that? We're just like each of these things now exponentially grows in terms of the data that you actually work with. So those are all the possible data points that could affect what you're actually doing. I'm curious, Stephanie, if there's something that I missed or something that you want to add on to that.
I don't think so. I guess the only question that I would add into there, Josh, is you mentioned that in a lot of companies, payroll is just one sort of aggregate number. How, if a CFO is going to manually allocate that aggregate number across departments and classes, how often is that split based on reality, and how often is it something closer to a directionally correct guess?
I like to say all the work that I do is based on reality and I'm getting everything 100% correct and I feel comfortable with it. The truth is, sometimes it's way too overwhelming getting to that insane level of accuracy. And if it's 80% good enough, if the board, if management is not pushing back, I may just call it a day and work on to the next project.
Yeah, and I think that that's exactly where we come in to give you that highly precise, that crisp, accurate data that you can count on. If someone on the board does drill into something, your project time tracking is where you can go to find that root cause of where that 12% variance you talked about actually comes from.
So that's honestly another great point and something very relevant in our fractional CFO firm. We have a lot of contractors, consultants, employees who are on an hourly basis, and we need to allocate their capacity to different clients. Then we need to analyze throughout the month, not at the end of the month, not the next month, how close are they to what we thought was going to happen. If someone is doing 20 hours extra for a client and we're billing that client a fixed price, well, we're just losing money now for all of those extra 20 hours from what we initially budgeted. And if I find out after I already invoiced the customer and we're well into the next month, well, now that causes an issue. So, yeah, time tracking is another huge part in all of this that can become really challenging. I want to call out Dan over here who had a really great comment. It's a pretty cool feature that over here I could show to people. I really love this new software. But he says the chart of accounts is key, and almost no one other than the CPA understands how to identify, how to actually work with this identification. And it really is amazing. When I first start working with a company, 9.9 times out of 10, their chart of accounts need total rearrangement. Even if I'm sometimes working with a company who is working with another accounting firm, I see them put like an investor's name directly in their chart of accounts, or they have like vehicle expense or taxi expense or rail expense, and they're like $4 each month when it should be actually consolidated. So this is a really good point that your data is only as strong as the way you're actually going to aggregate it and show it to the readers of the financial statements. So thank you for sharing that, Dan. All right, we got a lot of other stuff that we want to go over. So let's just talk about, again, how exactly do we get the close rate? And like we were talking about, you have two options. Most companies that I see, they have the close done in the back end, maybe the last 10 days of the actual month. And the reason for that I always hear is the same. Well, the data is not available until the first of the month. I can't get the bank statements until the first, maybe even the third if there's a holiday or if it falls on the weekend. The information isn't really available and it takes time to ultimately reconcile. So a lot of times the mistake that I see companies make is they don't work on actually making progress on the data that they do have available throughout the month. They're always playing catch up to before, which means a lot of the events that then happen in the company, you're always being reactive to. The best companies that I work with have this term that was actually coined a few months ago from another webinar that we did together, and that is a continuous close, where you're constantly throughout the month taking the information. You have systems that allow you to ultimately shape and transform that data so that when the month closes, yeah, you're waiting still for those bank statements, but everything comes in and you can reconcile it fairly quickly without any of those large bottlenecks. When you have that information, again, we have to go through those steps like we spoke about. You need to do the proper bank reconciliation. You need to do the proper accruals and adjusting journal entries. Those adjusting journal entries oftentimes affect the actual revenue that you're working with. You can use software, which oftentimes will help you eliminate a lot of these issues and allow you to work more efficiently. But if you're a smaller company, you may continue doing that in Excel, which could also work. The key, though, especially with everything that we're talking about, right? All of these things oftentimes have a workflow, but I have yet to really see a strong workflow where the information that comes directly from a payroll platform can get shaped and transformed and posted into your general ledger or report or whatever you need exactly at the granularity, at the segment that you need easily at your fingertips. I don't know if people can really resonate with this idea, but I have found even though a lot of these payroll platforms, they offer this automatic journal entry that they push. I have found that the amount of time that it takes to undo that journal entry and to get it correct exceeds the amount of time that if I would have just done it entirely on myself. And the reason for that is a lot of these payroll platforms, they group together the payroll tax expense, right? They take the employee's portion and the employer's portion. They then take the salaries and they show the net amount. But most of you probably know you need to show the gross salary. You need to show the actual employer's portion of the actual taxes. So to me, this is probably the most challenging part of a month end close, just getting that payroll part correct. And Stephanie, I'd love to ask you again, as someone who like lives and breathes this all day, why is this so challenging?
It's a bottleneck. It's people speaking different languages, right? That translation layer, figuring out how to turn all of the information about what folks are doing into the information that you need to translate payroll into GL, having GL ready outputs, that's just hard. And so far, most of the way that people do that is extremely manual. And it comes down to a lot of effort. And what would we all do if we had 24 more hours in a day?
I have some ideas.
Yeah, me too.
Well, I think that you have a lot to share on that. So I want to turn it over to you. And Cynthia says that she can resonate with this idea, right? Rippling, which I love, is a great payroll platform. We even use it. We used it ourselves for a long time. The journal entry is still slop, right? They haven't actually figured out how to actually solve this. And if I'm not mistaken, you guys have. So I'd love to just see a little bit more about how you guys are approaching this problem.
Yeah, absolutely. So I'm going to share my screen here. So we talked a little bit about the difference between having really accurate, precise data and maybe a directionally correct guess. And we're going directly at the problem of getting that data to finance without burdening your most expensive employees, because I don't know anybody yet that I've worked with that says their staff loves tracking their time. That is just nothing. So that's where we really come in. We act as that translation layer between what people are doing in the systems that they're already working in, right? There's already activity information available there. And what higher level aggregates finance needs to drive their projections and justify the decisions, as you talked about. It's more than just accounting. It's also strategic decisions. Where do you put the next dollar? So what I mean by that is here on a timesheet, we're not just asking people to remember what they did 3 weeks ago and give you that close enough guesstimate. We actually capture the footprints of the activity that people are already doing in the systems that they use as part of their professional roles. And this can be Outlook, Jira, Salesforce. We translate that into 2 steps. First, we look at the client's projects, tasks. Again, in that billable use case or nonprofits, you know that you need this layer of data to be able to do your billings, right? To be able to translate that into your reimbursable grants or your invoices for your clients. And then the second step in the background, what's going on is the system's also mapping effort to categories that finance cares about, the classes, the departments, so they don't have to scramble to manually reclassify that data before the end of the month. Importantly, there's also human validation. So in the age of AI, someone mentioned slop in the comments, right? We see that AI is really incredibly useful. We see it smart mapping, and we think, okay, is there also a human validation layer? That's something that a lot of finance teams who are subject to strict regulatory or audit inspection talk to me about a lot. So there is the ability to say, hey, the employee is going to attest that this is true and correct data. And then a manager can come in and also review this information, confirm that it's valid, so that by the time it gets to finance downstream, everything is completely auditable. There's a historical record, there's proof of validation, and all of the data is actionable, auditable, and ready for finance as it flows into the system. So it doesn't hit you at the end of the month and say, are you ready for close? I worked, Josh, last year, just a question that comes up to mind as I'm walking through this. I mentioned that life sciences org that I worked with last year that was spending like 4 days of every month figuring out how to take all of this department utilization information and turn it around and fill in their gaps in their data. As a CFO, what red flags would that raise for you?
Well, I think it goes back to what we were saying, and that's just the timeliness of the data, right? It's one thing for it to be accurate, but that's just what I like to call table stakes, right? Like it needs to be accurate, that's for sure. But if it takes a long time for you to then provide that information, if you're missing key deliverables at board meetings, it goes back to what we're saying, right? You're then being reactive instead of proactive, which to me is not the best way to run a company.
Yeah. So I want to switch gears a little bit and look at ways to be more proactive about variance in the system and what a good time tracking solution should be surfacing that variance in real time so that there is an opportunity to course correct before you have to account for it at a meeting. So let's look at some of the ways that this platform, what you should be looking for. Here you see that you can see all of your projects, and at a glance, you get a really good indication of how your portfolio is doing against their budgets and against their project constraints. You want to be able to drill in and see what the drivers are for that, how costs are aggregating over time, what your billings look like, and any root cause analytics that needs to happen from, say, a project manager or a frontline manager, being able to account to you for that variance and project out, hey, we're going to expect changes to happen. This is where you might go to look at that. The time record becomes predictive of how the project is going and where large variances might occur downstream. It's not just a case of looking at what people are doing. At the same time, you might also take a look at how people's utilization is spread. One of the things that I hear about from CFOs all the time is we're not aligned about where to spend the next dollar, what initiatives are paying off, where are the big winners and where are the cost sinks. So you can also look at how your headcount is spread across those um, programs, et cetera. In your experience, I want to sort of double click on the idea that there's a bridge between operations and finance for a minute, because this is something that comes up in my conversations with new clients all the time. The worst case scenario that I hear about from folks is that they watch decision windows slam in their faces because ops and finance aren't on the same page about how a new strategy or a new initiative, how much that might really cost to execute. In your experience, how risky is that kind of impasse?
I think to me the biggest risk is finance and accounting being siloed from the rest of the company, right? And it's very easy to make that mistake in thinking, okay, you're only working with financial data, but a company again, it's this complex thing with all these different departments, all these different decisions, and all these different growth trajectories. You really need to be synced with all these other department heads. I think one of my favorite lines that a CFO once told me is that a financial model should be owned by one person, but collaborated with as many people as possible. So
I think
yeah, I think that could be a really serious risk.
I think that's so important, and the thought partnership between finance and other leadership roles, department heads. I think that that's something that goes missed a lot of the time. How important that thought partnership and that co-sponsorship of decisions is. So we've been looking at how data flows into the system. I've been showing you a little bit about how it can be accessed by managers, how finance and ops could look at this data together and have a shared source of truth, right? We're all looking at the same data, we all have the same information. But I want to switch gears again. That second layer of translation that I talked about to get something GL ready or finance ready so that you're ready to act on it, that's a secondary layer of translation, right? It's not just projects, it's also your classes, what you need to have that chart of accounts, where are you mapping things to? And that's where our reporting layer comes in. I'm going to show you an example, and this is just an example of a report that we worked on with one of our clients last year. They had a really aggressive capitalization target. And so what they needed to do, their IT team had to make sure that at a moment's notice and on a regular schedule, they were delivering this information about CapEx utilization for their team up to their finance team for them to track against the goals and against that budget for the year. What they were finding though was that they had four to five person hours every day for a week leading up to that reporting period on both teams, looking at the data, finding mismatches, and doing the translation effort, which they saw as a huge opportunity cost. Not just the cost of the time that their teams were spending, but the cost of what they, could have been spending that time on. So what they ended up being able to do is generate a scheduled report that went out automatically to all of the stakeholders involved. They were able to build it once, schedule it. It was delivered into finance's hands without actually anyone even needing to log into the system. And this kept finance able to be highly informed and aligned with the department head and the IT team without them needing to, again, manually crunch all of that information. I think that's where I think about that. What I mentioned earlier is what would we do if we had more hours in each day? And effectively, a good solution should give you some of those hours back, is what I'm looking at. And I think the last point I want to make, you mentioned something earlier about utilization and making sure that the targets, what you thought people were going to be spending their time on, making sure that your headcount is going towards the places that you anticipated. One of the things that our capacity planning features do, and this is important to have inside of your time record, because that's also where you're going to be comparing your forecasts to your actuals. And you want that live feed of that information available at any given time. One of the big questions that I hear from CFOs and hiring managers is, has anyone here ever heard, my team is overworked, I need to hire, from a hiring manager? And then you look at the revenue projections and you're just like, the math doesn't math, guys. I don't see it. Josh, have you ever had an experience similar to that?
I think similarly, people are now saying, well, don't hire someone new, just find out a way to automate it with AI.
Exactly. It's do we hire? Do we do more with the staff that we have? How do we get more without hiring? And one of the things that you have to look at then, one of the things you have to be able to pinpoint are, what are those inefficiencies? Where is the utilization suboptimal, and what interventions can you make to do more with that headcount you have? But it's also important to look at your headcount. And here you see a view of a 6-month rolling window of how booked up people are against their projected utilization. This gives you information like burnout risk. Are people as busy as they say they are? If I drill into any one of these folks, are they allocated against the right things? Is this the right spread of their time across these different initiatives? And this gives, again, the hiring manager and finance a really objective way to look at, I need more headcount, and see whether there's a more optimal way to get to that. They can either say, no, let's find some efficiencies, let's find some AI to do that work for them and shift it off of their plates, or they can go ahead and open that new hiring cycle more confidently.
Very cool. Thank you for sharing that, Stephanie. Should we move on to the Excel portion now?
Sounds great.
All right, everyone, if you on the left side, you should see the little paper icon. It says resources. Um, I think there was also a poll that we wanted to share that we may have missed. Do you still want us to do that poll, Stephanie?
Yeah, sounds great. The general question I wanted to ask you guys is that how often is your data, are you really confident in the data, and how often are you wishing you had a little bit more detail? That's the general gist of it.
Okay, well, everyone, if you don't mind just quickly answering that poll, you could also then download the Excel file that we're going to be covering in the resources section on the left-hand side. It's a little paper icon that you can show. So it looks like people over here are starting to submit the answers. We're mostly confident with some manual adjustments required, which I could certainly understand. Um, all right. Well, while everyone is pulling up that file, I'll go ahead and take over the screen share. And let's now have some fun in Excel. If anybody is having issues accessing the file, you can just let us know in the chat, but again, it's directly on that paper icon. So when you open the file, this is again utilized, I've generated all this information with our tool Model Wiz, for those of you who aren't familiar. The file over here is really just a three-statement model, right? A three-statement model has an income statement showing historicals and projections. It has a balance sheet, and it has a statement of cash flows. Three statements: income statement, balance sheet, and cash flow. But to get to this point, there's so much that you need to do. There's so much that you need to be able to manipulate, ideally efficiently, that piggybacks on everything we've been speaking about. So let me show you how exactly this works. And again, for those of you who are still having issues, it is the paper icon. It is the third from the bottom on the left side to access it. So in order to bring in your historical data, most companies bring it in this format here, right? Because this is how it comes directly from a accounting software or an ERP. While this is great to consume, this is called a semi-structured format. It is fairly difficult to manipulate. If you want to create a formula where you can toggle to any KPI and any month and return the value, it isn't really so simple. You could maybe like layer in a sum ifs or something, but it becomes a lot trickier. This over here on a tab that is hidden, but you can unhide in your spreadsheet, this over here is what's known as a structured reference. It's very similar to a trial balance, but a trial balance only showcases one period. This has every period from the start date of the model till the last month of actuals, allowing you to understand every value for every single account. But there's one thing different about this that, again, you won't find in a trial balance. Here, I'm not only bringing information in by GL account, I'm also bringing in information by class, which means if I have 4 classes and if I have 40 rows in my GL, 4 times 40, I'm going to have 160 rows for each and every single month. Very quick for this to really pile up and become tricky. But as this is a starting point, if you get the information in this format, it allows you then to pull it in to a drivers tab, which is a common structure with a financial model where you want to consolidate as many of those inputs as possible. And what I love about this drivers tab is, let's just zoom in a bit for everyone. Aside from the fact that I can control those inputs that I show historicals and the actuals, for those simple projections, I like to have a little drop down like this that I can toggle instead to a 12-month average, or I could toggle to a 3-month average, or I could even just choose custom and maybe I'll link in my own projections, whatever I actually need. So once you have the information in this format, you can override it, you can change whatever you actually need. And when we talk about, of course, data accuracy, if I make a mistake and edit something I shouldn't edit, watch what happens over here in cell A3. I have an error, right? because the information no longer matches to my source. So this is a perfect example of how you can have the proper data integrity so that you're not submitting something that you don't realize has a significant vulnerability, which I've certainly had my experience in doing before. If we continue though, remember, this is just your GL account, your classes, this is just one piece of data. Headcount is another really big piece of data that can be tricky. So in this example, if I want to showcase the impact of someone being, let's say, terminated on 3/5/2026, a lot of people make this mistake where they'll just terminate their salary and they'll take 1/12 in March. And now, if you think about it, they're over forecasting their expense by 26 days. Well, this solves that. You can see in this case, this person is being terminated in the middle of the month, and we're prorating that information. Now, this formula took a really long time to write. It's an LET formula. For those of you who are familiar with what a LET formula is, you can take a look at that afterwards. And of course, email if you have any questions. But now remember, I have all these departments, and these departments now are being mapped to a general ledger account and to a class account. And I could link that information back into my drivers tab. Now, I could probably have a whole session just walking through how to build this, how to create it. And again, you're more than welcome to skip that by trying our tool. But let me tell you now how you can actually consume data at that level. So in this case, this is a KPI dashboard, one of my favorite dashboards, because it gives me the 8 most important metrics to any business. Only now I'm not just showcasing the entire business. I could unhide information as I please. I can filter for a specific class, and all the information gets brought in across any time period that I want. So I can do it for this quarter, I can compare against a prior quarter or a prior year, and everything can update because now my drivers tab has the information for both of those dimensions that I pulled in from that structured reference. I can also show now to people a summarized view, which is always what I start with. I'll never share just a full detailed profit and loss. That would overwhelm people, especially those who are not in finance and accounting. But I not only have the ability to understand it by cost type, I also have the ability to understand it by class, whether that be my revenue by class, my gross profit by class. All that information now is at my fingertips, all these different dimensions. And of course, the most important report, especially in a board meeting, is going to be your budget versus actuals. And this waterfall shows me what my budgeted net income was supposed to be, what amounts caused that to be higher, what amounts caused that to be lower, and on until I got to my actual net income amount over here. And I could, again, just change this to show it, let's say, for all of Q1, and the information entirely updates. So this has been the masterpiece that I have been working on for the last 7 years, and it's an honor to be able to present this alongside ClickTime for how you can take control of your data and showcase the information at all of these different dimensions. So with that being said, I think this is now a great time for us to move to Q&A. If you haven't already shared your Q&A, you can in the Q&A button. It is the second from the top. Wahid, why don't I bring you on stage and you can walk us through what questions people are asking.
Sure, Josh. So I have already uploaded a few questions from the chat session that people have mentioned. So going ahead with
Okay.
Tom's question, is it better, or let me see it, show it on the stage?
Yeah, let's bring it to the stage. That's right. Is it better to use raw data such as GL activity or trial balance activity to construct the model, or download the reports out of the ERP into the model since you already have properly classified the data? By raw data, Tom, I'm not sure if you mean data that hasn't already been classified. I'm a really big believer that whenever you do work once, you ideally don't want to redo that work. So my preferred workflow is I first classify, aggregate all the information properly into the ERP, then I pull it into the ERP, right? You're not going to want to do that in Excel. The exception is if you are doing a 13-week cash flow and you need to be able to present the data via the direct method, which accounting softwares don't really support. You then may need to recreate all of those classifications directly from your bank feed, which you would do directly in Excel. So I hope that answers your question. If you have a follow-up one, you could also just share that. But good question.
Okay, moving on to the next one.
So this looks like a question for you, Stephanie. So the ClickTime would need staff to log the time allocation each time they work on a task then.
Yeah, actually, let me clarify. This is what is great about that connections feature. What you see is basically a live feed of information from people's calendars, from Salesforce, Jira, a variety of locations where they're actually already doing work. It takes the footprints of that activity and it pushes it into ClickTime. So the employee doesn't have to log every hour that they spend in the different softwares where they're already fulfilling their roles, responsibilities, but you still get that information flowing into the system and mapping to the projects, departments, and classes that you need on a live flow of data.
Perfect. I'll just mark
Thank
this
you.
and I'll just put up the next question.
I'm assuming this project level would be a question for you, Stephanie. I could also share about how I would do this in financial modeling, but why don't you first tell us about QuickTime's capabilities with projects?
Yes, the origin of QuickTime was for project time tracking, right? And that, but the flexibility is there for you to set it up at project level, department, initiative. I've seen people map directly to GL classes in the past. So there's a tremendous amount of flexibility, but the core idea is that the project time or that initiative-based time flows into the system and you get that granular look. That gives the operations folks the ability to maintain the project constraints in real time, and it gives finance the same view into how it's going. So you're always having that thought partnership that Josh and I talked about.
Okay.
Thanks for sharing that. In terms of the financial model at the project level, it would be that same additional dimension, which again, our tool also supports, just like they would with classes.
Okay. Josh, I think this question is for you.
This model, that PBC table, which stands for prepared by client, that's where the information gets uploaded. Our software updates it automatically, but the idea is that all these tabs automatically update when your source information from that tab updates.
Okay. And moving on to the next question. Okay, this is also for you, I guess.
I think this would be for you, Stephanie.
The headcount info will be manual entry.
Or maybe. I think it may be for Model Is. You would pull it directly from your payroll platform because yes, as Stephanie and I mentioned earlier, it's not common that you have that data directly in your accounting software, especially at the level that you need.
I will say that the one flavor variation for the nonprofits here in the audience, you do need to join your payroll data directly with your utilization because that speaks to your percentage-based grant allocation. So that's one of the use cases that QuickTime is also set up to address for you.
Cool.
Okay.
I'm not sure, Stephanie, if you can speak to how long it takes to onboard a company with 125 employees. I'll just quickly share on my end to build a model with 125 employees. Most models that we build, if I'm collaborating with someone directly on your team, is less than 48 hours, including all the customization and inputs needed. If it's just me working independently using our tool, we're talking a matter of minutes. So you could always try it for free if you want to give that a shot. Do you have any thoughts though, Stephanie? Like, I'm assuming onboarding a company with 125 employees, we're talking minutes for you guys.
Yeah, onboarding is one of those tricky topics because it takes as long as it takes your team. We like to say that we partner with you for change management, and that includes all training. So it could take weeks. But this is compared to ERP implementations where you're thinking about months, hundreds of thousands of dollars and months worth of effort to get that onboarding. ClickTime is quite easy to stand up.
Cool. I can't really speak much to the other tools. I can say that we are by far the most affordable tool out in the market. Most FP&A tools are 20,000 plus a year. We are as little as $300 a month for one company, $100 a month for multiple clients that you work with. So that's that. Cool. I haven't heard of that one, but thanks for sharing.
I think that would be the last one. And
Are there any other questions that anyone has?
okay, so we have a question from, let me share it on stage.
Which dimension, oops, do you want to bring that back?
Yeah.
Which dimension is focused on project or department as they aren't necessarily the same? Correct. You would just choose which one that you ultimately want, and you would bring in that dimension. Right now, our tool can't support both, but it would work just as a class. So if you bring in project, it would still have that same structure where it brings it in. Okay, well, I think we are just about at time. This was a really great session. I had a lot of fun. Once again, a huge thanks for ClickTime. For those of you who want to learn more, we'll be sharing more information via email. Thank you to everyone who joined the webinar, and we're excited to see you guys all at the next one. Take care, everybody.